Welcome to the Captain's Blog. I'm David McDonough, Senior Vice President at Trilogy Financial. On this blog, we try to take what's unnecessarily complicated back there in Wall Street, make it understandable to you on Main Street. Another week, another record high. Up 2% last week, 8% for the year, and get this, almost 17% since the end of March. The melt-up continues. War, what stinking war? Inflation, gas prices, who cares? Let's just keep buying those AI names we can't pronounce. Did that trade continue, or did profit-taking ensue? Here's your week in review. So we started the week with President Trump talking about the truce being on life support. And then hotter than expected inflation numbers came in on Wednesday, with some people, some experts, talking about the Fed actually raising rates. Well, the new Fed chair coming in next week, appointed by the president, I highly doubt it. We also have the president in China, and China reiterating the fact that they also want the Strait of Hormuz open. As of this taping Friday morning, it looks like we are giving a bit back, but still flat for the week, which we'll take. Here's what to look for next week. We continue to pay attention to the inflation numbers. Are they transitory? Also, folks, with the market at an all-time high and most targets on Wall Street only 2 to 3% higher than where we are now, expect profit taking. As a matter of fact, do that exact same thing in your portfolios. I talk about it each and every week. It is time to rebalance. It is time to take profits and these high flyers that are up 200% in 6 weeks and continue to diversify. And here's your personal finance tip of the week. I just mentioned it is a good opportunity to take profits, but in taxable accounts, that is going to be taxable. So two things, make sure that you're taking the long-term capital gains, anything over 12 months. Also, now is a great opportunity to tax loss harvest. What do I mean? Sell anything in your portfolio that has a loss to offset some of those gains. But know that there's a wash sale rule, and if you want to purchase that position back, you have to do so within 30 days. I also talk about active versus passive, being active with your portfolios and rebalancing. But the underlying investments also have to be active. With the market at an all-time high, index funds, in my opinion, are simply just going to track that. I prefer to have somebody actively managing that portfolio and picking 20 to 30 positions where we all see value. So thank you all for checking in here on the Captain's Blog. We'll see you next week.